Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Lots to talk about. Tariffs, of course, top of mind, top of conversation. Once again, Indonesia this time. Ray of hope, question mark. I'm Prashant. With me, my colleagues Nigel and Rima is with us today. Guys, good morning.
Hi, but still waiting the India-US trade deal, right? I mean, at least for Indonesia, it's come down, the tariff rate to 19% from 32%. But India remains a question mark.
Well, that's right. And it's not a Wednesday, right? We're getting used to Trump saying big, beautiful Wednesday morning. So spoke about coal last night as well. It's not just coal, big and beautiful as well.
So it's his right attitude to start your day, right? I mean, big and beautiful. Why not? Well, let's just quickly take a look at what you need to know as you start another trading session. So let's take it from the top. So President Trump essentially said that Indonesia will pay a 19% tariff after securing a trade deal. So 19 on Indonesian goods, 0 on US goods. But this is the thing. The letter which was sent to Indonesia earlier had 32% as the tariff rate. And that's the point here. So that 32% in a few days of negotiation, back and forth, etc., has come down to 19%. And that is the reason why I'm saying a positive sign, perhaps, for those who got letters and are negotiating. The important point is those who got letters and are negotiating. So two countries in particular, there's Philippines and there is Thailand as well, if you can move this along. And of course, I mean, it kind of also confirms the market's view that higher tariffs will be revised lower. Eventually, higher tariffs will be revised lower. The Indonesian deal also shows that eventual US tariffs will come off but still remain high, around the 20-odd% mark. Of course, I mean, the market expectation is that end-state tariffs could be between 10-15%, but that's moving up. Will it finally land up at around 20%? We'll have to see. It'll be a big jump because, I mean, when Trump took office, I think that number was about 3%, 4% or so. Of course, President Trump also hinted that there will be a couple of more deals announced soon. He hinted that India is working along the same line as Indonesia. But of course, I mean, we didn't get a letter, so we are kind of sort of starting from scratch. We don't know where that process is at this point in time. If the Indonesian deal, as President Trump himself said, is any indication, I mean, we'll see how this one goes. But markets, of course, are not holding their breath. I mean, I've said this before as well. It's not as if tariff news flow is really moving markets in a big way. 30% on the EU over the weekend did not move the euro or the dollar in a meaningful way. So I think not very much else will. That is as big as it gets in terms of trading partners and a big tariff being announced there. US equities last night, I mean, they sold off a little bit. S&P was down 0.4. The Russell was down about 1.9% as well. But, again, a little bit up, a little bit down, but broadly, I think it is the markets remain pretty constructive. Nvidia, of course, continued to drive the Nasdaq outperformance. The Nasdaq actually ended higher, unlike what the S&P or the Russell did. The 10-year, it was up about 5 basis points. We're back to about 4.5%. The dollar index is bouncing around about 98.5 odd on the broader dollar. So those are sort of roughly levels we are looking at. Macro markets, I mean, largely remain. You get these bouts of uncertainty and huge moves, and then the market cools off and does nothing for long periods of time. That's essentially what we've seen in 2025. I'll just circle and tie in the levels then. Yesterday, of course, the market. So Friday was a big corrective day. Nifty lost 200 points. Monday, of course, the market came off a little bit as well. Yesterday, we got a bounce. We'll need to see if the correction, it's a short correction, it is complete or not. And if it is complete, then the low of 25,001 should not be broken, and it should hold. And on the upside, I mean, the 61.8% retracement of this very short fall is 25,400, a very immediate kind of level on the upside, which we'll need to sort of climb up above. For the Nifty Bank, similarly, the support is 56,594 on the downside. Bank Nifty, of course, also ended high yesterday. 57,628 is that same upside level for the Nifty bank, which we need to climb up above for the market to look a little more constructive. So in that sense, an interesting kind of day. GIFT Nifty is indicating 80-odd point lower start once again. Rima.
So pretty much giving up yesterday's gain. So yesterday, the Indian market snapped a 4-day losing streak to end higher by about 110 points. The mid and the small cap indices outperformed, gaining for the second day in a row, up 1% on that. But let's just quickly take a look at the top cues that are shaping trade today. First, on the flows, the DIIs and FIs net buyers. The DIIs buying close to about 1,500 crore in the cash market. FI buying muted at 120 crore. On the global radar will be key prints from the US, the PPI index. We had the CPI print yesterday. Now the producer price index will be tracked, the industrial production and the Federal Reserve beige book. On the earnings front in the United States, big banks will continue to report their numbers. Overnight, we had numbers from JP Morgan, Citi, Wells Fargo. Today, it's going to be Goldman Sachs, Bank of America and Morgan Stanley. Back home, earnings reaction, and we'll discuss them in top 10 in greater detail, but HDFC Life, ICICI Lombard, HDB Financial Services, Network 18 just dialed. And amongst the big ones reporting numbers today, in the Nifty pack, only one. Tech Mahindra. But outside of that, LTTS, that's L&T Technology Services, Angel One, ITC Hotels, Orient Hotels, and Ixigo. And Glenmark, after that big deal, will be holding its investor day today. And finally, on the India-US trade deal front, a fresh round of negotiations is currently underway in Washington with the Commerce Ministry team on ground. And Chief Negotiator Rajesh Agarwal is set to join the talks today, as both sides are hoping to, finally get that deal going. So those are some of the big things you need to watch today. But Nigel, what are you looking at?
Well, in yesterday's trading session, though the Nifty has been consolidating for the last few days, the good part is the small cap index put on another %. And for this week itself, if you look at the small cap index, well, it's gone up 1% each on both the two trading sessions, and it's at a 6-month high. So that's pretty good news. Good close is what we saw on the small cap index. Well, what about, the other positive for me yesterday was that after a while, we made a higher high. So all these trading sessions, we were making lower highs. And yesterday, in fact, it was a little bit higher. So that's good news. In fact, you'd like to make a higher high. Today, I know the Nifty is going to be starting off in the red, but maybe this is the level that you should be looking at. We like to make a higher high yet again. So we'll keep an eye out on that front. What about the FI as well? They added some mild shorts. The clients, though, they are piling on the longs. And if you just take a look at the chart, you'll see that the client positioning, well, it's moving towards that 1 lakh contracts on the long side. While on the short side, the FI short positions, well, they're holding at around 1.21 lakh contracts. As I've been saying in the past, this is the combination normally that you like. But the FIs, having some shorts in the system gives you a bit of a cushion, provided things don't go horribly wrong. And in percentage terms, the FI short positions are at around that 81% or thereabouts. Well, the options data should come up for you on the screen. And, if there was some put writing yesterday. So we saw a bounce from the lows. So today it will be challenging to see whether or not these puts are unwound, because yesterday there was some writing that we saw both at the 25,200 put, 25,100 put as well, which brings us to the levels that we're looking at. Well, in terms of a support, the 24,950 and 25,000 mark is important. Here's where the 50 DMA comes in at. Here's where, in fact, you have the recent low as well. And it's almost a 50% retracement of that entire move that we saw, from the lows to the highs and then the pullback. So this level, this range is very important. On the upside, as I said, the yesterday's high will be 25,245 or thereabouts. But the 20 DMA, that becomes the line in the sand. The Nifty bank, that'll have to lead the way. And that's actually been doing that. And it continues to hold above the 20 as well as the 50 DMA. So that's why, in fact, this one is the one that will have to hold its ground. Till these levels are protected, you'll have to say that the Nifty bank is in a good space. Stocks that I'm looking at, Biocon, the last few years, the stock actually has been a relative underperformer. But they've got an FDA nod for the biosimilar, that's insulin aspart. And, that has a very, very large market out there. So we'll have to keep an eye out on this one. There was some bit of pre-buying that we saw yesterday. So Biocon is one stock. And the other one I'm looking at, is Bombay Dyeing. Yesterday, we had massive delivery-based buying on this particular name. And it conquered the 20 DMA on a closing basis as well. So cash market stock, we'll keep an eye out on this one. Much higher delivery-based buying is what we saw on this name.
Okay, on our radar is Bombay Dyeing. Thank you for that. Let's get to the equity calls then. Venugopal Gare of Bernstein says, while the strain is evident and the government appears to be relatively quieter than they were in NDA 1 and NDA 2, a supportive base, improving liquidity and limited risk from global sources should continue to support a 6.5% range for the economy this year. He says they do not see India in a phase of collapse that we had in the middle of last year, protecting downside risk. He expects some more returns for the Nifty, and their year-end target stays at 26,500, which is another 5% return in H2. From a sector perspective, he says they shift some weights from utilities to staples, moving it into a tactical overweight for a short period. Utilities moves to an equal weight, and they stay overweight on financials, telecom, small discretionary.